Good morning, Richard Calhoun, Creekside Realty, 40 years of working with buyers and sellers here in Silicon Valley. We're here today to talk about week number 37 of 2021 and the changes in the real estate market. The green is my base URL. To that, you add the purple suffixes to get to the different sections. I will go into more detail later on. My contact information is at the bottom highlighted. This is the first graph. It's looking at the supply and demand compared to the 5-year normal. Now, the first thing that jumps out at you is this huge change in the gray line. What's going on? What does that mean? It basically means absolutely nothing. That's the number of new listings in the past week and compared to the 5-year median. And basically Labor Day was at the end of the cycle compared to the last 5 years, which is 2015 through 19. And so you had a big run up because the holiday was late. And then because of the holiday, you had below normal, and now you're right back to normal levels. So basically through all that, we've had normal inventory coming on the marketplace, but the total inventory that's available, you can see, is low and getting lower. Why is that? It's because the demand, the red line, is above where you'd expect it to be. And that's the real question, is why is demand so high? People are talking about people fleeing Silicon Valley because of COVID and being able to work remotely and things of that nature. People are talking about shifting of homes, needing to buy something else. But if you're shifting homes, you would be selling something most likely and buying. So the inventory would stay the same, and the demand, the inventory would be higher along with the demand being higher. If you're leaving the area, the supply would be higher and the demand would be lower. That's not what the data is reflecting. This is a breakdown of everything. And this is to show you the huge difference. You can see single family homes in Santa Clara County only have 53% of the inventory you'd expect it to have. Compare to that to the condos in San Mateo County at 195%. So Santa Clara County has half the single family homes that you would expect it to be. Meanwhile, San Mateo County has double the condos you'd expect it to be. And you can see there's a shortage in both counties in single family homes and a little bit of a surplus. And the last is what the values were last week. So you can see there's some fluctuation from week to week. There's a surprisingly large drop in San Mateo condos, but that's a fairly small marketplace. So that's statistical fluctuation more than anything. Then you look at DUI. DUI is what you look at them recently in offers, what's going on with offers. It's basically how long it would take to sell the existing inventory at the existing rate of sales. And again, you can see Santa Clara County single family homes is at 20, San Mateo County single family homes is at 29, which is significantly slower, but both are a strong seller's marketplace. Anything below 40, I consider to be a strong seller's marketplace. 20 to 15 is basically insanely fast. 30 is, aggressively fast, where you'd expect a price appreciation and things like that. Even these 32 and 31 that you're seeing in condos is fairly good. It's a strong seller's marketplace. Then you look at closings. In closings, we can get the sale price. So we look at how much the buyers are overbidding, both on the frequency, and you can see that's a rate at 81% for Santa Clara County single family homes, 79% for San Mateo. Condos and townhouses are coming in right about 70%. So you can get the flavor right off the bat that condos and townhouses aren't doing as well as single family, but they're still doing pretty well. Then you look at the magnitude of overbidding, and it's a little bit interesting that even though San Mateo County is a cooler marketplace by every measure that we've talked about up to this point, it's actually overbidding more aggressively than in Santa Clara County single family homes. My best explanation for that is there's more percentage-wise, I think there's probably more well-to-do areas in San Mateo County, and the pricing is slightly more expensive. So people that are buying houses in San Mateo County may not be counting their dollars as closely as some of the people buying in Santa Clara County, which keeps the overall magnitude of overbidding down. All kinds of explanations. There's no way to know. That's one of the reasons I like looking at the technical analysis of the marketplace, because it's telling you what all the buyers and sellers are doing versus what any one analyst thinks is happening in the marketplace. And you can see condos are down at 103 and 105%. This is looking at days of unsold inventory. This is, in my opinion, the single most important indicator. The yellow line is the 5-year median. The reason for the break is to make it clear that to the left of the break is 2021, to the right of the break is 2020, and to get the break, you have to subtract 1 from the week numbers in week 28. So for example, week number 39 in the year 2020, but that's really week 38. So this is week 37 we're looking at. You can see we're down here just about 20%, 21, I think it was 20.9% if I remember correctly, and you'd expect it to be up by at 40 based on the 5 years, 2015 through 2019. For a balanced marketplace, you'd expect it somewhere in this white area to be the place where the buyers can have some strong ability to negotiate. You have to be up here in the blue area. What's interesting about Santa Clara County is it's either in a blue area or a red area. It spends very little time in the white area where you'd expect it to spend the bulk of its time. And most of the time it's in a balanced marketplace. It's just transitioning. This is looking at the sale price to list price ratio of every week. Now it is interesting. The purple line here is the most recent week, and you can see it's gone back up. Last week, it was the worst week. The orange is where it was last week. So basically 3 weeks ago, it was the gray line, which is essentially exactly where we are with the purple line now. Last week with the orange line, it went down and it improved. So those are the fluctuations. What's the overall trend? Well, notice the dotted lines are up near the top, and then the dashed lines are near the top, and then the solid lines are more towards the bottom. So what that's saying is the last 8 weeks have been cooler than the previous 14 weeks. Again, not a huge thing. Where do we stand? Our best month ever is way up here in 2018, April, and then our worst year is down here in December 2020. So you can see you're sort of in the middle of the range. You're towards the upper part of the middle of the range. And frankly, anytime you look at this graph and you come down here and you say 75% of the sellers are getting more than their asking price, we really can't be complaining. I mean, that's a strong marketplace. This is looking at the sale price. I'm comparing the sale price that it closed in the past week compared to what happened over the 5-year median. So you can see that a lot of the areas hit their peak back here in July, late June, early July, and that's about ready to start falling off the table. There's a few areas like East San Jose, the very affordable areas in Santa Clara County, relatively speaking, is just last week had its all-time record high appreciation of 26.4%. Currently, we have the expensive areas, Saratoga, Los Gatos, Los Altos, Palo Alto, at 32.7 and 25.2, basically the record high. If you sort of look at these right now, most of the areas overall is around 20%, and countywide, you're at 19% above the entire 2020 calendar year median price. And then jumping down to condos and townhouses, you can see that there's a whole lot less appreciation. And in fact, it was very interesting and I was slightly surprised about this, is Redwood City, which is a fairly large geographical area. It's actually lower now than it was a year ago. And that's of interest and then noteworthy and a little surprising. So I was actually going to go back and check it. And that's single family homes being lower, not condos and townhouses. And that's a quick recap of what's going on. I'll pause and answer any questions before I proceed with a little bit more detail. So if anyone has a question, go for it. Okay, not hearing any questions, I'll proceed. This is now looking at the breakdown. Here's where we're looking at the active listings. We broke it down by type of property, single family homes and condos and townhouses by both counties, San Mateo County and Santa Clara County. This week, you have 459 single-family homes in San Mateo County. You have 740 single-family homes in Santa Clara County. In condos, you have 192 condos in San Mateo County and 487 condos and townhouses in Santa Clara County. Not dramatically different. You can see the percentage from last week. So single-family homes in Santa Clara County went down by 3%. Condos and townhouses in San Mateo County went down by 5%. Condos and townhouses in Santa Clara remained unchanged. And in San Mateo County, they actually went up by 9%. Offers. Now what I'm looking at is just the past week, how many offers were accepted in the past week and how many offers were accepted in the past 5 weeks. And that's just to give you some idea on whether the market's accelerating or slowing down. I don't believe you can really make decisions on 1 week's worth of data, but it is an indication of where the market is potentially going. So that's why I have both of them on there. And what you can do is come down here to DUI, which is the real key. This is significant, especially this number right here, the 5-week number. The record low is 20.5%. I thought it was 20.9. So 20.5% for Santa Clara County single family homes. You can see that the 1 week average is at 18. So that's faster by about 10%. And when you're talking about being in the 20 to 18 day range, that's actually, in my opinion, a difference. Now, if you're talking the difference between 34.9 and 34.5, that's the same. You're not going to notice that difference. You're also probably not going to notice the difference here, even though it's 2 days, just like it was for Santa Santa Clara County single family homes, but it's a larger base. And so you're not going to sense that differential. Now, 4-day differential, you may notice the difference, or 5-day. And this would be an acceleration. This is basically a slight slowdown, an acceleration, and basically no change. So I think what you're doing is essentially saying that in the 5-week average, you have Labor Day data, which reduces the number of sales. And that's why the 5-week data is going to be a higher number, a slower marketplace than the 1-week data, which didn't have any holiday in it. This is looking at days of unsold inventory over time. You can see at the far end here, you have some fluctuation. San Mateo County came down and is going back up. Santa Clara County did the reverse. It went up and it's coming back down. The condos and townhouse market is relatively flat through there. This is my heat map showing days of unsold inventory in all the different areas. The redder the color, the hotter the marketplace is. The whiter the color, and soon to be blue maybe, is the cooler the marketplace. So here we're looking at Atherton, Menlo Park, and at Woodside, the expensive areas in San Mateo County, and it's at 82.5. So it should be slightly blue, but I remember from my data that was pure white. So I need to adjust these numbers here. I think I must have changed the formula without adjusting that, because this used to be 10 and now it's 7 because that's what the formula says. So I need to come out and find out what my new zeros are, because apparently they're not at 77.5 like I thought they were. I'm sorry. So I'll try to get that for next week. But anyway, the redder the color, the hotter the marketplace. So basically the heart of Santa Clara County is on fire. The bay side of San Mateo County is on fire. Morgan Hill Gilroy is doing reasonably well. And, it just gives you an idea of where the hotter marketplaces are. Now we're looking at the inventory, active listings without an underlying contract. That's the definition I use, slightly different than the definition a lot of people use. The MLSs tend to include properties that are in escrow that the listing agent's asking for backup offers or for the property to be continued to show. Most consumers and most agents don't show those properties. I think that that's actually misleading, because like at the beginning part of the year, you'll have almost no inventory because of the holidays. And so as you come out into the new year, the MLS data will show the inventory is increasing, and that increase is mostly in those pending continue to show transactions where my inventory is going down. The properties that someone can come in and actually purchase is going down. So you get sometimes, in my opinion, contradictory information depending on your definition. And this one definition is what got me involved in the statistics back in 97. I felt so strongly it was misleading counting those pending continue to show. So anyway, my definition is consistent, whether you agree with it or not. The yellow line is the 5-year median and the blue line is the current data. So you can see the separation starting at about week 15, 16. We've started falling down and having less inventory compared to where you'd expect the marketplace. And it is noteworthy, back here at the beginning part of the year, we actually had more inventory than you'd expect when media was saying we had a shortage. This is the number of new listings in the given week compared to the 5-year median. And if you were to ask me, I would say the blue and the yellow line are on top of one another. I would see no change between this year and the 5-year median. So available inventory coming on the marketplace is exactly what you'd expect. Now in 2020, you had more inventory coming on, and that was because, in my opinion, you had the delay from the pandemic. So you had for, a month or two, a lot of sellers that were resistant to come on the marketplace. And then they came on the marketplace later in the year, giving us this surplus new supply of inventory. This is looking at the number of offers accepted. And, frankly, this is the story. The demand, the blue line, is above the yellow line consistently and almost by a growing amount. So the demand is outstripping the supply. The supply is coming in is what it normally is. The demand going out is greater, and that keeps the pressure on to keep that amount of inventory available very low. And that's exactly what's happening. This is the frequency of overbidding. You can see we have been drifting down and had a fairly sharp drop last month, and we're now sitting here at about 75% of the sellers are getting more than their asking price. Part of that is sellers are aware that the market's on fire and getting more aggressive on the marketplace. And part of it is, even though the market is hot, the market has slowed down, but it hasn't slowed down as much as it normally does for the seasonal cycle. Obviously, there is a problem here with my data, and I did find it. I just didn't have time to correct it. It's whether you do 1% as 100 or 1.0. And different MLSs use different data, so I have to convert back and forth between them. And I have a diagonal going up through my data, which I don't understand. So I need to get to the root cause so I don't have this going forward. I don't believe there was any huge changes. Basically, we've gone from somewhere around 82% up here down to the 75% in Santa Clara County. So generally the trend has been down, but it typically is down at this time of the year. So nothing to be alarmed about. And it's not a huge drop. And here you can see the different areas. I'm also going to look into Foster City because it's been at 100% now for a couple of weeks. Make sure I didn't lock it in artificially at 100%, which I may have done. But the other colors are all seem reasonable and appear to be operating normally. The expensive areas in San Mateo County are right at essentially 50%, but 48% of the sellers are getting more than their asking price. That is being the least aggressive marketplace, excluding Foster City. Since I'm questioning the data, you're up here at 92% in Cupertino, Sunnyvale, and then you have a lot in the low 80s: East San Jose, Milpitas, North Valley, Campbell, Cambrian, Saratoga, Los Gatos, the Bay Cities. So a whole lot of areas are coming in there right around 80%, and that's pretty significant.
Richard?
Yes, ma'am.
When you say Bay Cities, and then I think in the previous chart you said coastal cities are the same thing.
No, coastal cities are Half Moon Bay, because this is the coast over here. Bay cities are the cities in San Mateo County that are on the bay side of the mountain.
Oh, okay. Now I see.
So here you have the Bay cities, and then you have San Mateo coast. I could put in San Mateo County Bay cities, but one side of San Mateo County is broken. It's broken up by the ridge line where Santa Clara County really doesn't go over into Santa Cruz side of the mountain. So that's why I do it that way.
Oh, okay. Now I got it. Thank you.
You're more than welcome. And don't hesitate to interrupt. Yeah, if you have the question, someone else has it as well.
Yeah, okay.
So here is your magnitude of overbidding. And you can see there was a fairly significant increase this year over last year. Last year, buyers were hesitant to overbid dramatically. Even though we were past the pandemic, people were unsure of what was going to happen. So they were conservative. But you can see it really took off about week number 6 at the beginning part of this year. And by week 16, it was up here around 108%. And we're now starting to drift down. And typically, I'd expect the marketplace to be drifting down between now and the end of the year. You never know what's going to happen. 2017, we saw a second wave of appreciation between August and Halloween. I'm not sensing that's really happening this year, even though the market's stronger than it was in 2017. But that's why you look at what the market's doing instead of trying to outguess it. Here's the heat map based on the magnitude of overbidding. You can see a lot of areas are right in that 107, 108%. Cupertino's coming in very strong at 113%. Foster City's at 114%. But the redder the color, the more the magnitude of overbidding. The paler the color, the lower. The weight up here is basically very little overbidding. It's 102%, and 101.5 should be my 0 point.
Oh, okay, Richard.
Yep.
So how about the Santa Cruz? Where I should look?
Santa Cruz is in Santa Cruz County, so I don't have that data. I only do San Mateo County.
Okay. I thought it was in Santa Clara County. Okay.
No, Santa Cruz. That's why this area up here isn't color coded. Just like Alameda County up here isn't color coded. My business is focused in Silicon Valley, which does get me up into Alameda County. But until recently, they didn't have the same database. We now have the same database, so I could pick up Alameda County. I could pick up Santa Cruz County, but it's just a lot of the extra time. When I'm working with a client, I actually do that for that particular client, but just to do it every single day and every week, it's just too much.
So, okay, I see.
And in general, what happens in these two counties happens in both Santa Cruz County and Alameda County, and even Contra Costa County, but delayed by a little bit.
What do you mean delayed by a little bit?
Changes that happen in it's sort of like a ripple effect.
Okay.
The center of the pond is right here, sort of on the San Mateo County, Santa Clara County border, and improvements in the marketplace typically ripple out from that. Now, there was a notable exception. We were doing that in 2003 and 4 and 5, but when the market came crashing down, it actually, instead of starting in the expensive areas, it reverted. It started in Sacramento County and came back in, and it was like the ripple hit a wall and came rippling back into the heart of the economic engine. Santa Clara County didn't get hit until basically the mortgage meltdown in February of 2007, where Sacramento was starting to complain, I think in August of 2005, and the San Mateo County area didn't get hit. The expensive areas didn't get really hit until August of 2008. So it was going, in that particular case, it went out, hit the wall and came back in. That's why you can't predict the future based on past performance. It's an indicator, but every time you come up with a rule, all of a sudden the market changes and busts the rule on you. This table is trying to give an overview. I did not have time to quite finish it. You can see I didn't get the prices pasted on here, but what it's doing is trying to give you an overview by the geographical areas, which are labeled here, give you an indication of what the three major indicators are doing, as well as price. The reason I put in price is, that, and the numbers aren't here, but the color code is. And on pricing, since we haven't really talked about that, the bluer the coloring, the lower the price, the redder the number, the higher the price. And basically with this one chart, people can figure out what price range, and then they can go and see how hot that marketplace is. But, you can just go up and down and look, the 82.5 jumps out as very high compared to all the other numbers. The 48.5 jumps out as low compared to all the other numbers, as well as the 102.2% being low compared to the other numbers. But you can see there's not a single area where people are on average paying less than what the sellers are asking. And that does not mean that it doesn't happen. Yes, there's all kinds of transactions. I think the number, if I remember correctly, was 75% of the sellers are getting more than their asking price. There's about 8-9% that tend to get their asking price, and that leaves about 17% that are getting below their asking price. So there is still a significant percentage of the marketplace that gets below their asking price, but when you put everybody in a blender, they're getting more than their asking price. This graph is the one we looked at earlier. I bring it up just because we're giving you a reference. So now we're looking at just the last 12 weeks. So you can see the purple line's improved over the orange line, which was last week. It's essentially close to the gray line in the upper end of the marketplace. But coming down here, you can see the gray line is quite a bit higher than the purple line. So overall, this week is still slower than 2 weeks ago, even though it's slightly better than a week ago. Now, again, down here, right slightly over asking price is a little bit worse this week than even last week. But the dotted lines are the oldest weeks, and they're mid-July to end of July. The dashed lines are basically the month of August, and then the solid lines are basically September. So you can see the last, which was August 28th, this solid line here is the best of the solid lines, and that's the oldest one. And it's sort of interesting. The best line is this line right here, and it's hard for me to really tell what color code it is, but I would think that that's July 10th up here. So July 10th, and maybe even, it might even be July 3rd, but I think it's the 10th. That's one of the disadvantages when you start dotting, you get so little color, it's hard for me to pick it up. But what it's basically doing is saying the market's been cooling, but that's very normal. Normally, the most number of transactions we have are the 5 weeks before Memorial Day. That often corresponds with about the peak pricing. This year, it's just a little bit later, but it's still the same thing, and we're cooling down. Here's your prices if you were looking for them, and this is where I get them to copy into that other table. But here, the bluer, and this is single family only, but here, the bluer the color, the cheaper the price, the redder the color, the more expensive the pricing. Here, these two tables are a little confusing, but I'll take a minute to try to explain them. We're looking at single family homes in Santa Clara County only. This is just to give, that's the single biggest micro market in the area that I'm covering. This table is looking at 5 weeks of data. It ended last night at midnight, 11:59 p.m., and it goes back 35 days. So I'm comparing this to October date, what I call September data that I normally get in October. So it's sort of forecasting. How do we compare now to normally what we'd be seeing on October the 6th? So obviously I'm projecting about 3 weeks into the future, but we're right now at 724 inventory. The closest match is 2017 with 700. No way to know, but my guess is we will be below 700 by the time we get to October the 5th. So this is just so you can see where we compare to the past 20 years. The amount of overbidding here, the magnitude and frequency is basically a record high. Prices are basically record highs. Speed of the marketplace up here, days of unsold inventory at 20.6. It's the fastest marketplace. Now, since I'm expecting the market to slow down, there's some chance we could catch this 24.6, but I don't think we will. As far as volume of transactions, you're at 35.2, you're 28.4, 28.7. Last year, we were at 34.7. So we may catch up and sell less homes this year than we did last year. And if we do, I think it's going to be a lack of inventory, frankly, but it's the same order of magnitude. So it's a way to do it. Now, that compared to this chart, the chart looks very similar, but now what I'm doing is I'm comparing factual data, because I'm now comparing August data, which I obtained on September the 5th, and I'm comparing it to data that I compared on September the 5th of past years. So I'm comparing apples to apples in this table. The other table was done just to sort of get a jump ahead. So people always want to know what the market's going to do. So that allows you to try to do that. So same data, different time periods. This one starts on the 1st of August and goes through for 35 days. So it includes the first 4 or 5 days into September. And because August is 31 days, it'd be the first 4 days, which is why I gather the data on the 5th. The table just before this ended last night at midnight and goes back 35 days. So I'm comparing the duration, but a different time frame. And with that, I'm done. So I'm open for any questions. And as I do it, this green is what I call my base URL. To get to the meetings, you add the purple as a suffix 2021 to get to the live presentation Saturday morning at 9 o'clock. To get to the hand specific presentation, you add in 2021, the month, 2-digit month and 2-digit date. So today would be 0918 to get to this archive. And I try to get it up Saturday afternoon, depending on my work schedule. Sometimes it's not till Sunday afternoon. And the handout, I try to get that up for the meeting. You add in the word handout. I did not succeed today just because I had a few technical issues. So did you come up with any questions, or are we done for the week?
Any questions?
Okay. Well, thank you for joining me, and I'll see everybody next week. Take care.
Okay. Yeah, you too. Bye.
Bye.